what we focus on is to say, number one, are you solving a real problem, right? And are you able to solve it 10x better with AI? Our view is that just in India, we can become the AI use case capital of the world. And I'm a big subscriber to that.
I'm an entrepreneur. I get 30 minutes with Rajan. I'm going to catch your attention and get you interested enough to give me second meeting. What do I need to focus on with 30 minutes?
Yeah, okay, that's a good question. What we want to do, I think, as a nation is where it should be as mainstream. Starting up a company should be as mainstream as being an engineer, going to an IIT, becoming a doctor, like whatever it is, right? If you keep asking yourself whether you have PMF, you don't have PMF. If you have PMF, you don't have time to ask the question whether you have PMF.
You must have gone through thousands of pitches by now over the class in a couple of decades. Do you think you have got this, now instinct built out and you are able to pick up certain patterns very early on? Rajan, welcome to Sparks. You may not realize, but this is the second time I'm interviewing you. Last time was, I think, about 10 years ago. You were a guest speaker at Myntra in our early days.
Oh, wow.
It was that Kudlugate office, the little funky office. You might
that's right.
recall, right? But it was a great thing to have you at that time because we were kind of starting to take off. You were running Google in India, and I think you had all these ideas about, the exponential growth of internet and so on. I remember team being quite inspired. So thank you for that. And thank you for today.
Of course. Thank you for having me.
So Rajan, you've been very deeply involved in the startup world, angel investing and so on, and we'll talk all about that. But, in your current role as running Surge, which is, I think, the preeminent program for incubating, nurturing startups in India, I'm guessing 70-80% of action has been around AI last 12 months. And you must have probably lost count of how many AI companies you probably evaluated, talked to. What is your sense? Where are we at? Is AI starting to become real as far as startup is concerned, or we need to be patient to let this, really play out?
So are you talking about globally or in India?
In India,
India. So I think in India, the Indian ecosystem, Mukesh, today is really about AI, but it's AI squared, which is it's all about India, and it's also all about AI, right? So what's very interesting is, if you look at the US, specifically Silicon Valley today, right, it's only about AI. I mean, if you're building anything other than an AI company, and especially if you're trying to raise capital, it's going to be very hard to raise, right? Whereas actually in India, what we're seeing is it's very broad-based. It's really all about India, right? Including AI. So whether it's consumer brands, vertical commerce, gaming, financial services, healthcare, education, deep tech, right, as well as AI. So I think that's very important because if you actually look at our last cohort of Surge and our next cohort of Surge, which is going to be in a couple of months, it actually represents, now our cohorts include both India and Southeast Asia. But if you look at the cohorts, they represent sort of what's going on in our innovation ecosystem. Of course, there's AI companies, 30-40% are sort of AI software type companies. But then there's also consumer brands, there's gaming companies. In our next quarter Surge, we're going to have some very, very interesting next generation fintech companies. So I think that's the first thing. Now, when it comes to AI, look, India's game is going to be at the application layer, right? So if you look at AI and you say, look, they're the LLMs, right? Now, of course, India is going to have a few of those companies. I think Sarvam is very, very interesting. Then there's sort of the next level, which is tooling and infrastructure. We think that there, India does have a play. We already have. So within the Surge and Peak 15 portfolio, Mukesh, we have about 30 AI companies today, right? About 10 of them are these tooling and infrastructure companies, right? Could be, how do you deploy LLMs in enterprises, a company like a True Foundry, or it could be how do you make, GPU serverless platforms and so on and so forth. But the real game for India is going to be at the application layer. So what we're seeing is application companies that are focused on different kinds of application companies, right? One is sort of a prosumer, right? So InVideo, which is probably, by the way, we think is the fastest growing 0 to 25 million ARR. It took 8 months to go from the new GenAI app to go from 0 to 25 million ARR and free cash flow positive.
Incredible.
Took 8 months. We think it's the fastest growing prosumer app in the world to go in that phase, right? We think there's going to be a lot of companies like that because building for prosumers around the world, there's hundreds of millions of them. Second would be vertical AI, which we think is probably the most interesting of all the application AI, because there you can have a data moat. There's workflows that are very complicated, things like that. So healthcare, retail, you name it.
we are beginning to see some very, very interesting companies. And then the last thing would be enterprise AI, but essentially functional, right? So customer support, sales, marketing, and so on and so forth. So I'd say where we are in India today is it's early days. If you look at the Silicon Valley, they're very focused on LLMs. Right? You look at the large funding rounds, either it's LLMs, and then now we are beginning to see Harvey, basically vertical AI companies like Harvey in legal and so on. I think where we are in India is we're beginning to see sort of an acceleration of these application AI companies, but they're across the board. It's not in any particular area. But our view is like this is a 20, 30-year trend, and this is ground zero. Models keep getting better, right? So I think the most important thing that if you're building an AI company, I know a lot of entrepreneurs. What your show is to avoid open AI roadkill, meaning you don't want to be wiped out by the next open AI release, right? So, and I think one of my partners just came back from a conference and he heard this thing, which was very interesting, which is to say, is your company going to benefit if, let's say, the next set of models get 10 times better? If the answer to that is yes, then you're probably onto something. But if what you're really betting on is that you only exist because there are some gaps in the current models, that's probably not a good thing, right? So,
and that means it's almost a given that these models will get 10x better.
Oh, they will. Absolutely, they'll get better, I think.
How do you think about seeing in early stage, one of the key things for company is to get to some revenue fast because you don't have too much runway. But in some way, the current AI revolution, depending upon how you count, has been either 1 decade in the making or maybe 5 decades in the making. And still, a lot of things are not ready. I mean, these models do need to get 10x better before they are in some ways truly production ready. How are you seeing AI companies navigating? This is one great example of getting 25 million in 8 months. That's incredible. But I think what I am seeing is a lot of AI companies are not able to find they are able to build this very interesting prototypes and demos, but not something which is production ready where consumer or an enterprise ready to pay, because there's some gaps in technology. Is that a concern?
No, actually it's not. So I think there's a couple of things going on, right? One, what we're seeing is consumer adoption is the fastest, right? Because the consumers make a decision themselves. So that's why the prosumer apps grow very fast. And even if you look at the vertical apps, right? Let's take Harvey. Harvey is not selling to an enterprise, right? There's an individual making a decision given the nature of the business. So the adoption cycles are much faster where an individual is either for themselves or for a small business, where they're able to, right? So we have a company, they're based out of Noida called Attentive, right? So they're a vertical AI company focusing on outdoor services. These are smaller firms. Yes, there are some larger enterprises, but largely they're smaller firms, right? This company is growing really, really fast because the decision-making cycles aren't as long. And also, those small businesses don't worry as much about hallucination or data privacy or governance, right? I think where you're seeing longer deployment cycles, where there's, if you talk to Infosys or Wipro or TCS, right, they'll say like almost every client that they have is running one or more pilots, usually multiple pilots within an enterprise. But very few have gone into production. I think the only functional use case that is where two functional use cases that are in production, right? One is coding, and the second is basically customer support, right? Customer support, I mean, the benefits are pretty high. But outside of that, it's still very much in pilot mode because you can't have these models hallucinate. You're worried about your data. You're worried about governance, things like that. So I think that's a matter of time. So the way we look at it, what we focus on, Mukesh, is to say, number one, are you solving a real problem, right? And are you able to solve it 10x better with AI? Be it Gen AI, be it computer vision, be it NLP, whatever it is they're using. Lately, it's been mostly about Gen AI, but we have some very, very interesting computer vision companies, right? Still, is are you able to solve it in a 10x better way, right? So the reason in video is growing so fast is because it used to take a YouTube creator 4 hours to make a video. Now they make it in 2 minutes. So if you're able to say, like, let's say you're able to, do this podcast in like 2 minutes, right? You will pay $20 an hour, $20 a month. You'll pay a lot more than $20 a month.
Absolutely. Right? I don't know what does the team here think about it, but
exactly. I mean, I don't know what all of you would do. So this idea of one, are you solving a real problem, right? But second, are you able to build a 10x better solution? And the third question that's really important is, how will you defend that position if the models get 10x better? If the answer is if the models get 10x better, you can't defend the position, then I think you have a challenge, because models won't get 10x better in the next year, but certainly over the next few years, right? So that's where the vertical use cases, right, get very interesting, because there you have a lot of data that is specific to the vertical that, the large models are not, they won't get access to them, or they won't really care, because, it's like a specific area. And then second, the workflows are quite complicated, right? You have to have a lot of sort of workflow automation in that particular use case. So we don't worry as much. We're seeing a lot of, look, our view is that just in India, right, India will become, Nandan said this, I think, about a month ago, right? We can become the AI use case capital of the world. And I'm a big subscriber to that, because both we have Indian use cases and we have literally 1 billion people, 1 billion problems to solve. But also historically, we've proven that we are very good at application, right? The reason Infosys, Wipro, I don't know whether you know this, but 2 out of the top 5 and 5 out of the top 10 IT services companies globally are Indian companies.
Yes, absolutely.
What do? They solve problems for large companies. That's what they do.
That's right.
Using technology, right? They didn't invent the operating system. They didn't invent hardware. They just are very, very good at applying. They're really good problem solvers and applying sort of technology that exists to solve large enterprise problems. So we think that this is the next wave, and we'll do very well.
No, I think I want to reiterate some of the things. You're making some very important points, and again, a lot of probably early stage entrepreneurs who will listen to this is worth for them to mull over this. One is the idea of making something 10x better. That is not necessarily Gen A. There's some for early stage startup. That's how you earn the right to exist, because you make something incrementally better. The company who is already in that space will see what you are doing, they'll catch up their increment. They have their existing advantages. So this idea of 10x better, it's it's easier to articulate. When you interact with entrepreneurs, early stage companies, how do you assess that this thing is going to be 10x better? This 4 hours to 2 minutes is outlier case, but a lot of it may not be obvious. Like, are there things you look for saying this has the potential to be that 10x better?
Yeah, so I think the before you get to the 10x better, I find that for early stage, because by the way, every day I will listen to, except Mondays, because we have our ICs on Mondays, Mukesh. Every single day, I listen to at least 4 or 5 new pitches, brand new, first time. And usually my first meetings are 30 minutes, right? I find the single biggest thing that many entrepreneurs need to get better at is getting much better at articulating what the problem is. Right? Because if you can't articulate the problem in a compelling, interesting way, right? Where I say, wow, that's really, that's interesting, right? Then getting to the solution itself, right? Because the reality is we don't know what the problem is or the solution is, right? We're depending on the entrepreneurs. I think that's the first. I think second, look, 30% at Surge, Mukesh, 30% of the investments that we make or companies we partner with haven't written a single line of code, okay? So there's no product. I mean, we don't know whether it's 1x or 5x or 10x better. So the bet we are making is 2 bets. One, we are betting that this team, usually, the pre-launch companies are very technical in nature, that there is enough history there and enough experience and capability that they can actually build. And second, we're saying, look, depending on the technology approach you're going to take, this can be 10x better, right? We actually do think that Gen AI can make many things 10x better, right? Same thing with computer vision. Same, you can pretty much. So we do think AI can make many things 10x better. I think the first big question is, what are you focusing on, and do people really care about things like, let's take marketing, MarTech. MarTech is going to get completely reimagined. Now, some of the existing incumbents will build large businesses, but new entrants can build very interesting companies, because why do you even need most marketing functions anymore? We have a company, one of our search companies in the last cohort, Mukesh. They landed Unilever as a customer, not HUL, Unilever, globally, without a sales rep, right? They didn't have a human sales rep. Their AI BDR landed, got them Unilever. I mean, they got to Unilever, got to the right, and then of course the founder had to pitch, right? So this idea that and and by the way, we invested in this company. We invested. They were doing some other stuff in AI, but this has now become the product, because we were saying, how do you get Unilever as a customer? And they were like, right. We said, we didn't know you had a sales rep. They said, we don't have a sales rep. So we said, how do you do this? And so we have an agent. That got us the meeting. So if you think about it, wow. So that means you can take function like sales, right? 70-80% of what a sales function does, right? prospecting, setting up the meeting, converting an inbound lead, setting, like all of that stuff. And then eventually we think in a year or two, the voice-based models, right? The video-based, voice-based models will be big enough, good enough, where you can have a no latency pitch with a customer, right? Okay, your Mukesh is the human, I'm the machine, I'm the AI agent, and I can have a chat with you, and maybe I can even close. So I think we're like a few years away from that. So we think that in many, many, many different areas, right? AI can help you build 10x better products.
Yeah.
But I think you got to really start with what is the problem you're trying to solve,
and be probably as sharp as possible, because
very
then,
sharp. So we, like one of the things we look for deep insights and specific insights, right? And then also last week we talked to a very pedigreed, really pedigreed team coming, building an AI company. But they were just too generic. Now, partly, because they're very seasoned, they'll probably raise a large round, and I'm sure they'll build something interesting. But they weren't as specific, saying this is exactly how, at least this is how we're going to start, right? Now, what they'll end up, as we know, they'll pivot and they'll change and they'll do all of. But at least that initial idea needs to be very specific.
And what have you seen, that process to come up with that specific idea and insight? What does it take? People obviously don't wake up with a deep insight about something.
I think there's most of the time they've experienced themselves, right? So in our next cohort of Surge, we have a former CTO of one of India's most valuable companies. He is building software. It's a dev tools company, it's not an AI company. He's building a dev tools company for a problem that he solved, that his team solved while he was at this company, right? So he said, okay, so then, he's solved it before. He's seen it in large, high transaction, systems, right? So, so that is, I'd say most of the time we are backing a founder who has experienced this problem and either has solved it within a big company or knows that it's a problem because they've seen it. So that's, that's most of the time. But then there are times when, this great entrepreneur spent the last 6 months looking at lots of different, actually just before I came here, we listened to a pitch of, again, a very, very interesting AI company. But this entrepreneur spent 6 months, just looking at different models, studying different types of things, and then finally honing in and saying, and then he did a lot of customer discovery. He talked to dozens of potential customers saying, look, is this a problem? Because that's the other thing, right? You go, if you haven't faced it yourself, you don't want to start building until you talk to some potential users of the product to make sure that it's real. So we do see that good founders building companies or problems they haven't faced, but usually they do it after some real exploration and so on.
Got it. No, that's very good input. I mean, a lot of times, the entrepreneurs, especially one with the experience, have, they think the first port of call is VCs. Try to raise some money. Let's just throw some slides together and go and pitch and, cook up some story. But either, you have been in an environment where you're facing some problem and you can be proactive about it. All companies have unsolved problems. The bigger the company, more unsolved problems. And you can be on the sidelines of those to develop a lot more context, deeper insights. That's why Google and Facebook, so many people come out of those and start amazing companies. Or you do what your second part, which is just been 6 months. 6 months is not that long of a time. I remember in the early days of CureFit, you would have probably talked to about 500 people, just what do you do for your health? What do you think about health? And eventually the business, we had some thought process, but a lot of sharper insights came from those conversations. So that's probably a critical, if you don't have insight in your company, then spend 6 months talking to just lots of
I think that's something that more founders should do, because before they hone in on the idea, but also I think, Mukesh, especially for technical founders, right? After they start building, because they like to build and build and build and build and build. At the end of the day, you have to sell.
Right.
So the sooner you can, even if you so we are big proponents of this notion of design partners, right? Where you go sign up 5 or 10 or 15 companies to work with you, so that you're co-building the product with them, usually 3 to 5, so that at least you're solving a real problem, right? Because especially if you haven't faced it, and you kind of have an intuition that this is a larger problem, it's very, very important to get this validation sooner. I mean, it's easier with consumer internet, right? Because you build something, you launch it, nobody uses it, then you keep pivoting and iterating. So
now some startups may say that, look, we are too early, we have no money, how do we sign design partners? But then the counter to that is, look, you have to learn to sell. You have to, you must have some network, go just beg, borrow, steal.
By the way, getting a design partner doesn't require any money, right? What it requires is for you to be able to articulate the problem and convince and figure and find a customer that actually thinks that this is a problem. So in fact, if you can't find a few design partners, because you're saying a design partner is before you build, right? Saying you're going to co-build, now you have to obviously do a bit of selling because they can't think that you've got nothing yet, right? So you're in the process of building. And then what we find is like, in our next cohort of Surge, Mukesh, we have a company. When we invested in them, they had the founder and one of India's largest companies as a customer. One person.
Yeah.
So, because, he can build. And of course, he's not a seller, but it was a problem, right? Where you can go land, not one of the largest companies, but one of the largest companies in that space. So, we think that this is really important because I do think I agree with you that what I find now is, too many founders, it's less so now, 2021, we saw this in spades. Too many founders were just trying to raise capital. Yeah. Right? Like, okay, but like, what are you going to do with it?
Right. So you mentioned you every day are listening to 4 or 5 pitches, pretty much for 4, 5, 6 days a week for who knows, like I know you've been very active in the early stage investing even before your Surge stint.
No, I couldn't do it before. When I was at Google, I didn't have time to meet.
But probably I'm guessing you were doing more. For every company you invested, you probably did 10 pitches at least, right?
Yeah,
so where's going to get to it? I mean, you must have gone through thousands of pitches by now, or like last couple of decades.
Tens of thousands, probably.
Tens of thousands, right? I mean, and that, so there you go. Your 10,000 hours of listening to pitches already done. Do you think you've got this, now instinct built out and you are able to pick up certain patterns very early on? Like most of it has to be like look familiar to at least pattern wise, like how people are pitching, what they're
I think yes and no, Mukesh. So look, I was a very active angel investor before I joined P15 and at the time Sequoia. But the last 5 years, I've learned so much. Every single day I learned something new, right? So if I thought I knew anything about investing, I knew absolutely nothing. So I think this is it's like everything else, right? I think you need 10,000 hours in venture capital, right? Because you have to wake up every morning thinking about it, go to sleep every morning. And I've been only doing this 5 years, so I think I have another 5 years to go before I can say. So I look at all my partners, right, at Peak 15. Look, they are all so good. It's remarkable, right? Because they, like Shailendra, GV, and Mohit have been investing for 18 years, right? I think all my Shailesh has been investing for 15 years. I think all our other partners have been investing at least for a decade, some like 10, 12 years, right? So you have this institutional knowledge. So one of the things that's been very helpful for me is I get to learn from all of them, right? And my team. Yeah. So I'd say, yes, you get better. But, one thing in investing, I used to say, even when I joined for the first few years is, we're not going to do this. It could be a sector, could be a kind of, we don't say that because I know now if I say we're not going to do this, we're going to end up doing something. Right. Because the thing is, you have to have an open mind. Yeah. You have to assume that, anything is possible, right? But at the same time, I think individual investors have things that they prefer. Right. Like, and things that maybe they're not as excited about.
And your point about, learning is obviously spot on for all of us. The world is unfortunately or fortunately moving in a faster pace than we can keep up. So learning is, I think, an absolute imperative, including, folks who have worked for 18 years. Right. It's just, word is not going to pause. But no, my question is slightly also on in terms of, let me ask it differently. I'm an entrepreneur. I get 30 minutes with Rajan. I'm going to catch your attention and get you interested enough to give me second meeting. Yeah. What do I need to focus on my 30 minutes?
Yeah, okay. That's a good question. So I'd say, look, firstly, keep your introduction to a few minutes. But tell me something about yourself that I can't find on LinkedIn. And also that's going to make me say, wow, now I understand why you're building this. Yeah. Right? Like, why are you the right person for this business? So that's number one. So keep that. Sometimes, founders have 10-minute introductions. Look, I mean, unless you're Bill Gates or Mark Zuckerberg, or you're Mukesh. Mukesh, if you're Mukesh, everybody knows who Mukesh is anyway, right? So just don't sometimes just being being thoughtful about what are you going to say. And be authentic, be authentic about who you are, but like why? So that's one. I think second is, look, spend 10 minutes on the problem. Yeah. Get me or get whoever you're pitching to excited about why is this such a critical problem. Bring it to life, right? Like, so for instance, if you're building a consumer company, talk about consumers. Why are they facing this problem, right? If you're talking about an enterprise buyer or you're talking about a developer or you're talking about a small business, bring it to life and in that 10 minutes, if you really, and you have to have deep insight, right? Like you have to really, we have to say, I mean, I have a simple saying, in 30 minutes, if I don't say wow a few times, I'm not that excited. I mean, I'm not saying wow to the founder, but I'm thinking
now
to
they will
myself.
all be watching rather than muttering wow.
Yeah, exactly, right? So I'm thinking to myself, saying, wow, that's really interesting, and so I'd say that's the key, right?
Yeah.
So within 10 to 12 minutes, so 2 minutes, okay, now I understand why you're building this company. So I'll tell you very interesting. So in our next cohort of Surge, we have a company that's actually offline healthcare. Right? We've never had an offline healthcare company in Surge. We have our first one. And this founder has been through this particular, I can't tell you what the company is, but this founder has been through this particular thing that she's trying to solve several times. I mean, by the time she took 3 minutes, I'm like, yeah, I get it. I understand why you're trying to solve this. There's deep empathy for the problem. She's, like the person's gone through it. So then the next 10 minutes is about the problem. And then I think the rest of it should be, how are you going to solve that problem? As opposed to like some big, platform. A lot of tech entrepreneurs want to build a platform. How can you build a platform before you solve this? You don't ever build a platform, right? You start by solving very specific thing. And then the last thing, what I'm looking for is, somebody who is successful really wants to build a large company. So, some founders say, in 3 or 4 years, I can sell this company and you're going to make 5x. And I'm thinking to myself, I'm not going to get out of bed for that.
That's right.
I want to see that at least you're going to aim to build a very large company. And of course, very few will get there. So I'd say those are the things. But if you ask me, sell the problem. If you can sell the problem,
clear. So instead of launching into how cool my product is and these are 10 features.
Don't
and all
start
of that,
with a demo. I don't know what problem you're trying to solve. That's so one of the mistakes not mistakes, but things that founders could do better, right? One, they took too long on the intro. Well, firstly, they're late. I mean,
30-minute meeting late.
No, I mean, you have 30-minute meeting. If you're 1 minute late, by the way, what people don't realize is, and this is my training from McKinsey and working for Microtel and all these guys, you cannot be late. Because see, what I learned was, if you're late, it's not about what you're essentially saying is the other person's time is not important.
Not important,
It's not about your time, it's the other person's time, right? So if a founder is 1 minute late, I mean, there itself, now you're docked few points. Now your bar is even higher, right? So I think don't be late. Second, be very focused with your intro and don't ramble on, right? And then just sell the problem.
And this probably also requires some preparation. If I'm going to come pitch to you, if I spend few days thinking about it, doing sharpening, rehearsing, right, versus just trying to wing it.
So at Surge, we have a whole week. We run weekly. I mean, we have 3-4 hours a week, right? It's not the whole week, but we have a whole module, Mukesh, on how to develop your story. We do that early in the Surge, which is what is the story, the founder origin story? What is the story about the company you're trying to build? And then we have another whole week later towards the end, 3-4 hours just focused on what does a great pitch look like? What needs to be in it? And by the way, there's a lot of resources on the internet. I'd encourage founders to go do that, because sometimes and by the way, very few founders can pull off without, you pulled it off without a deck. Mukesh Bansal, you don't need a deck. Everybody else probably needs a deck.
I was in my 20 years, so hopefully I learned something.
No, I mean, some people come and okay, if you're a master storyteller, right? In the old days, if you were Yash Chopra, okay, maybe. But if you're a normal engineer leaving some great company, trying to build, please get a deck, because it helps you structure your thoughts. And then the investor is not wandering off. Because otherwise, what's going to happen? We're going to wander off, right? If you're not, so get a deck and then tell the story. There is a way to tell a story that's very compelling. I mean, literally on a scale of 1:10, Mukesh, there are very few 8, 9, 10 decks. Okay, most decks that I see, because I do so many meetings, is a 1 or 2. And if you 1 or 2 deck, it's hard to get excited.
And the longer the deck, the probably worse it gets.
So you can't have a long deck. It's only 30 minutes. 2-3 minutes is your introduction.
It's not. I mean, sometimes people just find difficult to stop. I think 10 slides for a 30-minute is more than enough.
8-10 slides, is more than enough, right? Because your introduction, you have to sort of talk about that. And then just maybe one slide on the team, if you have a team, or co-founders or whatever. And then a couple of slides on the problem, and then a couple of slides on how you're going to solve it. If you have a product, the demo is really important. Actually, there are founders we were excited about, problems we were excited about, but the demo was just really bad. That's not good. I mean, especially if you're building a tech company and your demo is really bad, that's not going to help you.
Because also giving you a message, because ultimately I'm going to use the same demo to pitch to clients.
You're going to pitch to customers. Customers are going to,
yeah.
And also it shows us like, okay, like at the end of the day, right, excellence is important.
Yeah.
If you're going to just, so I think, yes, we should launch fast and iterate, but not with a crappy product.
Right.
Some people sort of take this launch fast and iterate, say, I'm going to just get a crappy product. You get a good product out. And then you iterate.
Yeah, I think this is reminding me, there's a saying, right? How do you, one thing is how you do everything.
Right.
So some of these are signs of, going to late here, you're probably going to late a customer meeting with your teams.
Right.
You're tardy with your presentation here, and so on, just reflects everywhere. Just maybe, I'll ask you a reflection question. Last 20 years, you would have always seen the entire, entrepreneurial ecosystem evolve a lot. And both, I think, quality-wise and quantity-wise, there are, I don't know, it's very difficult to count, but tens of thousands of entrepreneurs probably every year who are coming in, What about the maturity and the quality of entrepreneurs? Just subjectively, how have you seen that evolve?
Yeah, I think the best founders in India, Mukesh, now are 1,000x better. Because, see, the thing is...
So if I was starting out now, we'll have no chance.
No, I mean, you have a huge chance. You're probably 1,000x better, right? When you moved 2006, compared to then, you're probably 10,000x better, right? Yeah, hopefully. No, I think, see, the thing is, the first unicorn in India was 2011. That was in Mobi. Okay, by 2015, maybe there were 6 or 7. There weren't more than that, right? And then, so I think what has changed is a lot of founders who are starting up now have actually grown up, right? Like in our next search cohort, we have 2 fintech companies.
Yeah.
Both teams world class. I can confidently say, Mukesh, we can put both teams up against any fintech team in the world.
Amazing.
Anybody. Silicon Valley, China, you pick your favorite country. They are that good because they have grown up in these scaled up, they've seen the journey, they built products, they've shipped products. One of them literally within 3 months had signed up 10 banks. Okay, like how, I'm not talking about little banks,
right?
HDFC Bank, SBI. How does, because they've done this before. They're not waking up and saying, who do I call at SBI? So I think especially in certain spaces, fintech certainly, we are world class today. I mean, I can confidently say there is no ecosystem in the world that is as world, that comes even close to us, right? Consumer, commerce, brands, we're getting very, very good, right? I think in software, in some parts of like application software, we are pretty good. In other areas, we have some ways to go. So the quality of the best. So look, 2 things have happened. Okay, one, the number of entrepreneurs has increased. Right, we have 110,000 DPIIT registered startups. That's a large number, by the way. There's less than 10,000 companies that are funded. Most startups, are bootstrapped and they'll build their way. But if you look at the top, let's just call it the top 1% of the founders today, compared to even a decade ago, they're literally 100x better. Wow. And I think every year that goes by, they just better only because they're growing up in this. In this ecosystem, right? Like if you built and shipped product before, if you've done partnerships, if you've sold, like when you start up, you're just going to know what to do, right? You still have to go through the journey 0 to 1, find product market fit, but it's just much easier.
So ecosystem is many ways training these people.
Oh, absolutely.
A lot before when you're ready to start on your own, because you're observing all this context. And I mean, I'll come to Surge in a minute. That's significant enabling component. Among many others. But in this also, where do you think the role of something like Shark Tank, because it's become immensely popular?
Yeah, I think look, what Shark Tank it seems to have done. By the way, in our next search cohort, we're hoping to have a Shark Tank company.
Oh, okay.
First Shark Tank company. Okay. That went to Shark Tank, and then I've been trying to get 1 or 2 of our companies to go to Shark Tank, but Anupa Mittal and all are like, maybe we're too late, whatever. I think what it has done, Mukesh, is it has mainstreamed entrepreneurship, right? Where it doesn't matter where in India you are. People understand, right? Like it's mainstream. It's mainstream television. Yeah. So in that context, I think it's very, very positive because, what we want to do, I think, as a nation is where it should be as mainstream. Starting up a company should be as mainstream as being an engineer, going to an IIT, becoming a doctor, like whatever it is, right? So I think that's what, and also people have begun to understand, like, what does it mean to raise capital? Now, of course, that's not the way venture capital operates. So I think we need more of that. I mean, it's great that you and many others are, like part of what you do with startups. Your podcast is about many other things. I think we just need more of this, where I think we just, India is a land of entrepreneurs, right? For thousands of years, it's been entrepreneurial, and it's coming back.
Yeah. So Shark Tank, is probably helping stoke ambition. People are able to see these people mainstream television saying, look, this is how getting some exposure to how
I can start up a company.
Right?
I can raise funding, and also I think it makes for a lot of young people, as you know, right, parents have to be accepting,
right?
So I think at least what I'm hoping is that it's impacted the parents as well, where it's okay. That's pretty cool.
Right.
You can go start up a company. You could be like that person.
Right. So let's talk about Surge now. You joined, I think, about 5 years ago to help start the whole program. Was Sequoia then, Peak 15 now. I think many cohorts and I think some outstanding companies have already come out. What was the thought process behind, it's in some ways, I don't know what you call it, whether incubator is the right word or studio is the right word or...
Yeah, so we call it a scale-up, like a seed platform, right?
Yeah.
It's so I think the thinking... so Surge was launched before I joined Mukesh, and we just finished our 9th cohort. So I joined towards the end of the first cohort. I joined because of Surge. I joined Sequoia at the time, Peak 15 now, because I was very inspired by this idea of Surge. So the thinking there was, given the stage of our ecosystem that was 5 years ago, right? It would be beneficial for founders if you could provide a lot more than capital, right? What is a lot more than capital? It's capital. Help them understand how to build companies.
Yeah.
What is it that you have to do very early in your journey, right? So that you can end up with an enduring company. So that's number 2. Third, can you provide world-class capability support, recruiting, tech, product, marketing, early days in a concentrated way. So to help you get to product market fit faster. And then once you start scaling, do all the things that you need. So that's a third. Fourth, we said, look, it'll be great to have a community that is very active, right? And because there wasn't anything like that in our region, right? Of course, if you live in Bangalore, you have your friends that are founder friends that you can hang out with. Same thing in Gurgaon or Bombay, but there wasn't so that's the third. And then finally, we said, look, we should also enable you to raise capital and make you just simple things, right? Like really help you prep.
Yeah.
Right, when you pitch, you should be like Steve Jobs on a stage.
Yeah.
So we said, look, let's just do more than that, right? Because there were a lot of seed investors. They invest capital, and then they'll work with you, right? A partner will work with you. We said, look, let's bring the whole firm, and our partners Shailendra and the rest of our partnership. Their idea was, can we leverage Sequoia globally, the 50 years of history at the time, whatever it was, 48 years of institutional knowledge, right? Backing companies like Apple and Cisco and WhatsApp and LinkedIn and whatnot, to really bring that knowledge to bear. So what Surge is, so that was the thinking, right? And so what Surge is we invest up to 3 million first check.
Yeah.
Right, average is a little more than 2 million from us, but we're also open architecture.
Okay.
So our company, 80% of our companies raise capital from us and others at the same round. And then once the company has launched, because about 30% of our companies haven't launched, we take them through a 16-week program. So think of it as a Founders Academy. You've been kind enough to come to several of our, where it's a mix of every week is a different topic.
Yeah.
So we start with mission, values, sort of the most important things. Then we spend a fair bit of time on building world-class products, finding product market fit, etc. Then we go into sales, go-to-market, sales, marketing, things like that. And then we kind of end with fundraising, governance. So we try to, so our Surge is a lot more than just launch. Right? Our view is launching is, so we don't want you to launch fast and raise your next round. We already give you enough capital. We want you to build an awesome product. And of course, you're going to have to get to product market fit, right? That could take you 6 months, could you 12 months. So we give you enough capital so that you can find product, like really find product market fit. And our view is if you can't find product market fit after a few years, it's time to go do something else because, its opportunity cost is higher. So that's the Founders Academy. We have a community. So our team, we have about 25 full-time team members, investors and non-investors, so recruiters, product, marketing, engineering, who work with these companies individually on their needs. And then lastly, we have a community that's quite vibrant now. So that's sort of what it is today. We have small cohorts, so our whole thing is, we want to keep our cohorts very small, Mukesh. So we will evaluate between 3,500 to 5,000 companies.
Per cohort?
Per cohort.
Wow.
And we will have 10 to 20 companies. So our largest cohort was 23 companies. Yeah, so 0.2% is the acceptance rate. Largest cohort was 23, smallest cohort was 12.
Yeah.
So I think our last cohort was 12 or 13. So because our thinking is, let's really focus, try to absolutely the best.
Do you think is there an opportunity for someone to do a coaching center for search admission?
yeah. Hopefully
With that
not.
kind of acceptance rate?
Hopefully not.
That's good in a way that there is so much demand and so many people want to.
Oh, there's so much demand. I think India. I mean, look, there's over 100,000 registered startups. And now keep in mind, we're not just India, right?
Yeah,
we're
right, of
India,
course,
Southeast
yeah.
Asia,
Right,
now we're in
yeah.
Australia. We're quite regional. But India is 70% of the companies that we value. And we have a mix of inbound applications,
Yeah.
so that's like 3,000-4,000, and then we also have outbound.
Got it.
We have your team that's always looking for companies and looking for spaces and so on.
Got it. And once these folks are admitted, do they continue to work from where they are, or they come
Yeah.
together?
No, our model is, by the way, so we're meeting companies every week, right? So we have an application process.
Yeah.
But the way our model works is we meet companies every week, companies that we like, we invest in, right? And then once they launch, they will join whatever cohort that makes sense, because we don't want a company to join a cohort, meaning the Founders
Okay.
Academy,
Yeah.
before they launch, because we used to have a lot of that, and then they don't really want to focus on anything except just launching, right? So we said launch first.
Yeah.
So the way our model works, Mukesh, is we have 3 days in person at the beginning.
Yeah.
Then we go on Zoom. It's 4 hours once a week, on a Thursday usually.
Yeah.
And then we end with 3 days, 3 days at the end. So for instance, the last cohort, we started in Singapore with 3 days. We ended in the US with 4 days. And last cohort, when we ended it, we had, in addition to the cohort, we invited about 60 of our search founders. We spent half a day at the NVIDIA campus. We spent time with Jensen because, AI was such a big deal.
Yeah.
Right? It was a big part of our cohort. So.
Got it. And as now that you guys have done these 9 cohorts, in some ways, do you think you are teaching some aspects of entrepreneurship, or you are giving access to tools or mental models, way of thinking? In some way, I like to believe that if search model is working, you are somehow increase the probability of success, not only because you have 0.2% acceptance rate, something happens after that. What will you boil it down to? In what ways?
Yeah, I think, look, well, firstly, as you know, we won't know for another 5-7 years, right?
Fair.
We are 5 years in. So my view is anything that happens within 5 years may or may not be a great signal. I think our best companies are scaling very, very fast. They're very large. It's an interesting stat. I can't tell you the exact revenue data, but our top 10 companies combined annual revenue is getting to 9 digits almost, right? Which is a large number.
Yeah.
But what is much more impressive is 5 of them already profitable. So one of the things that we focus on is how do you build companies the right way?
Yeah.
Like our view, Mukesh, is if you have to, if you raise 2 billion and you're worth 3 billion,
Yeah.
that may not be like a great place to be. Now if you raise 2.5 million and you're worth 2 billion, now that's a great place to be, right? We're hoping, by the way, that's our goal. This is one company will get to be 10 billion, only surge round. We haven't won that yet. So I think what we're seeing is companies are just being built differently, right? So for instance, we focus a lot on being missionary, right? So most of our companies will have values, not just like write your values on a wall, but they will try to live those, right? Many of our companies, by the way, I'd say probably north of 60-70% will do employee NPS survey, which normally very few Indian startups do. If you talk to the X to 10X team, eNPS in the Indian ecosystem ain't great, right? I know your firms have always been great. So it's a bunch of these things I think they're practicing, but so what we're hoping is that all of this a decade from now, 5 years from now, I think by 2030 we can look back and with quantitative data, how many companies went public, how many companies got to, let's say 500 million or $1 billion of revenue because today my view is, look, getting to $100 million revenue, it's interesting. But it's not that great. You know what I mean? I mean, like, we're a $3.5 trillion economy going to 10 trillion. And if you only give me 100 million of revenue, what am I going to do with that? You know what I mean? Like, so I think we'll see that, right? How many companies really got to many hundreds of millions, like, let's say thousands of crores of revenue, became very profitable with free cash flow. So I think we're there. But already we can see that. So simple things, right? We encourage all our startups to do a weekly all hands. Very few startups do that.
Right.
It's just a simple, basic thing to do, right? It just improves visibility, transparency, empowerment. People feel more, so simple practices. Send a monthly update to your investors, even when things are going badly.
Right.
And we really try to hammer this in because most entrepreneurs, as you know, if things are not going well, they won't update anybody. And then everybody forgets about them. So whether it's a simple things like that, more substantial things like importance of values, etc. And then the most important thing, which is build an enduring enduring company. So those early signs are there.
Yeah.
But, we still have a ways to go.
Yeah, some of these tools, you're right, they may sound very simple, but I think they have profound impact on the culture that you end up building the organization. And Google till this date there's this TGIF thing. I'm sure you were part of that, sometime. They're a massive company, but almost like 3-4 hours every week, people get together and share everything transparently. So no reason for startups to not do that.
Larry and Sergey did it for 19 years, right? I think now in the last 2-3 years after COVID, I don't know what they've done. After I left, I don't know what they've done. But for 19 years, the two co-founders Google every single week, except the week of Thanksgiving and the week of Christmas, every single week at all hands, the whole company. Right? I mean, that's pretty remarkable.
Yeah.
So I think these are the things that I think a lot of founders don't realize how important these things are, because you build the right culture, like hiring great talent. We have we spend a huge amount of time around this notion of build an A team. Right? What does it mean? What do you look for? Right? How do you, and then also manage performance, right? Because you can't really hold on to low performers for a long period of time. So we have a lot of softer sort of culture, team, talent, leadership. We try to bring a lot of that into Surge, apart from building great products, get to launch, get to product market fit.
So part of what you are saying, Rajan, also is, this early stage startups don't need to be this black art. There is a lot of, hygiene things as well as best practices.
Yeah.
And also kind of keeping up with the times.
That's right.
And if you just, embrace all of that, then
I think, you just look at the end of the day, if you can just improve your odds by 1%. Right? You're pretty good. Now, if you can improve your odds by 10%, now you're really, right? So it's very interesting. If you look at, we're 9 cohorts in, but if you look at up through our 5th cohort, or 5th or 6th cohort, Mukesh, 70% of our companies have raised Series A. Okay, the market average in that period was 20%.
Incredible. So 3x.
Right? So 3x, right? Yeah. So by the way, raising a Series A, as you know, doesn't mean anything because, eventually the question is, can you build an enduring company? But I think these things really help, because you just get better at, like we have this whole thing, which is until you get to product market fit, try to keep your team as small as possible. The magic number is 8. Right? If you're building let's say, pure software company or consumer-led company, now it's harder if you're building spaceships. You can't have 8 people or rockets. But everything else, you're building, let's say, a new consumer brand. Do you really need more than 8 people? Probably not. Right? Get something out there. Try to see whether, it can work. And then you can start adding people.
That's an amazing mental model. I want to have a follow-up question. So try to have your product market fit with the 8 people.
Yeah.
That probably transfers some money question as well. $500,000, million.
Yeah, $200,000. But the thing is, the thing we've learned, Mukesh, is it could take you 6 months or it could take you 3 years. Right? So one of the reasons we believe that capitalizing at seed with a few $1 million, not a few crores, is important is because then you can really make sure that you can get to PMF.
Staying power.
Because, what we find is most startups scale before they have real PMF. Because they're able to raise some capital, right? So you raise a seed round of 1 or 2 million, then whatever, you raise 5-6 million Series A, and then you start scaling, but you don't have PMF, which means it's not going to sustain. You will not raise a B. Even if you raise a B, you won't raise a Series C. So that's why we actually we invest more capital than what you would need, because we don't know. Look, even if you have the best founding team, a great idea, a big pain point, the reality is it's never been done before. So it could take you 6 months. I mean, this is one of our biggest, there are like a few big learnings for us at Surge. One of them is getting to PMF could be 6 months or 3 years. Okay. And you've got to just keep iterating until you can find. But eventually, you should also say, because for a founder, at least we believe, for the kind of founders we invest in, we partner with, rather, Mukesh, the single biggest cost is your opportunity cost. Right? Because the reality is all of them can work for 4, 5, 10 times, 100 times what they get, what they're paying themselves as a founder. But more importantly, they can launch another company. A different idea, right? That could be much more scalable.
And do you also in the Surge coaching, you communicate to them what is a precise PMF criteria? Is it
so we've had 9 versions of our PMF session. Remember, like when you came, always question I ask you, right? How do you measure PMF? So we are trying to find PMF for our PMF session, right? So look, there are some basic things, right? Look, how many customers would be deeply disappointed if they don't use your product? If you're building a consumer. So what we have developed is for different types of businesses, Mukesh, what are some set of metrics that we give you? So if you're building an enterprise software company, okay? Get to 10 customers, get to $1 million of revenue with 110 or more NRR, which will probably take you 1 or 2 years. Then you can safely say, we have PMF, right? If you're building a gaming company, it's T30 retention, right? If you're building a consumer brand, if you can actually get some data on repeats, that's repeats and unit economics are probably the best. So what we have done is we've developed a set of metrics for different kinds of businesses. But that being said, look, the PMF session that we do at Surge, we keep pivoting on it because we haven't found the model. Because I think the final thing we've concluded is every business is very specific. So we work with founders.
But somewhat having at least, even if it's somewhat subjective, but having a criteria that you take seriously, that becomes, your...
No, so we are very clear. Yeah. So for every Surge company, we are very clear of what it is. So like, for instance, right, 2 cohorts ago, we had 2 vertical commerce companies, right? So in vertical commerce, unless you can get to, unlike in, when you all built Myntra and Flipkart, today, Mukesh, if you're CM2 negative, no chance.
Thankfully, they're out of this,
Thankfully, you're like a big sigh of relief, oh my God. Today, vertical commerce company with 3-4 crores a month of revenue, if you're CM2 negative. So like repeats, right? So vertical commerce, what is it, right? Repeats, unit economics, CAC to LTV, right? So what we try to do with each of our companies, same thing, right? Like for instance, ethereal machines, they make the CNC machines, etc. Right? So there it was, look, can you actually make a machine pay back in X number of months, right? And have an economic profile that makes sense. So what we try to do is we have generic set of frameworks with specific data, and then we work with each company to say, hey, look, let's agree on what PMF would look like. Because founders are optimistic, right? They want to get to PMF fast, but one of our roles is like be a reality check saying, no, we don't have it yet.
Got it. And once you have a PMF in some ways, then you really got some foothold.
Once you have PMF, our view is you've got to just run. Just run. And also, the great thing, Mukesh, as you know, is once you have PMF, it's just much easier. Like if it feels like you're pushing this huge rock up a hill, you don't have PMF. Actually, one thing I've realized, Mukesh, if you keep asking yourself whether you have PMF, you don't have PMF. If you have PMF, you don't have time to ask the question whether you have PMF. Traffic is blowing up, customers want to buy your stuff, your team is overworked. I mean, like those are the things, right?
People will be knocking on your door, and
people are knocking on. Actually, it's not just hard. Like if every day you're trying so hard to sell, it's not. You don't have PMF.
And Rajan, I assume you probably don't have time to do much angel investing now, given that you're.
No, I don't do angel investing since I joined.
But but you were doing before Surge.
That's right.
And I guess, as the startup ecosystem has grown, as well as Shark Tank and all that, there a lot of people are interested in angel investing. So I'm going to ask this question 2 parts, both from, first of all, entrepreneur's point of view. How should I approach about considering money from an angel? In the process, in the middle of writing my 3rd book, about entrepreneurship.
Right.
And somewhere in the investing, I have a section called All Angels Are Not Angelic.
Right.
So let's see how it comes out. But when I'm just going back to the question, how should early startups think about raising money from angels? Also, what's the mental model they should use? Who should take money from, who not to, and what to look out for?
I think the first thing is to even ask the question, do you need to raise money, right? Because I think today, we've got to a stage where it's not easy to raise, but there's a lot of capital. So, entrepreneurs want to raise capital before they know what business they're going to build. Like, how does this work? First figure out what you're going to build, right? I think, look, finding angels who can add value. So depending on the kind of business that you're trying to build, right? Because I do think, as an early stage, especially if you're a first-time founder, also important if you're a second-time founder, but, people who can help you along the journey, right? Either they've been founders before, so they've seen that journey, or they deeply understand the space that you're in, or they can make connects. I think if at all possible, trying to take, and lastly, by the way, people who have been angels, because the reality is most startups fail, right? So I think, if you're an angel investor and if you haven't seen failure, you don't want to be the founder. That is the first failure of an angel investor who's made 3 investments. Right? You happen to be the 4th, and the 3 happen to have worked because it's just early. Maybe 3 probably won't work. You just don't want to be that. So ideally, somebody who's been doing it for some time. But I think people in general take money from people who can help you, right? And also, like, the reason that if they've been angels is because they understand the game, meaning. Most startups don't work. So when you call them and tell them it's not working or you need to shut down, they're not going to get upset. They'll say, how can I help you, right? So I had a very simple thing when I was an angel, which is any founder calls me. By the way, I never, because I was at Google, I was running a $5 billion business. So I didn't have time to call and say, how's it going this month? So I was very clear, I'm on call. You can call me anytime you want. I will return your call. You ask me for any help, I'll try to help. I don't know whether I can help. But if a founder called and said, look, it's time for me to, I've tried all this stuff. If I felt it had potential, then I'd try to sort of tell them, hey, maybe you should keep trying. But otherwise, my only question, Mukesh, was, hey, that's great. Look, thanks for trying.
Yeah.
How can I help? Like, can I help you find a buyer for the business, or can I help you land a job, or whatever it is, right? But people who haven't been angel investing sometimes can get a bit tough on founders, right? Like, hey, look, my view is very simple. You spent 4 or 5 years trying to build a company. Company didn't work. What am I to like? I put in whatever it was, right? Like so. But I think the big thing is find people who can help.
So friends and family may not always be a great idea.
I think friends and family, because as long as they have no expectations, maybe is okay, right? Meaning, but like you take money from like your uncle, you're going to feel bad every time you see your uncle, By the way, if he's a nice uncle, he's not going to ask you, beta, how's the business going? But like you're going to feel bad, you took 20 lakhs from your uncle. Right. It isn't going well. Yeah. Like, what are you going to go back to your uncle 5 years later and say, sorry?
So at the very least, sets very strong expectations and be very, very clear.
Yeah, you should be very clear, right? Yeah. So I think friends and family is good as long as your family can afford it. Yeah. And there's no expectations, right?
Yeah. Because there's flip side of it also, and I don't know, I have not seen any stats out of you have not. Angel investing, I know a lot of founders do angel investing because it kind of keeps them in the loop. You know what is going on. You get to meet with all of interesting people, new ideas, and so on. And I have no doubt you probably did very well as an angel investor. But as a investment, class, because a lot of people now interested in, they don't know much about the startup world or the failure rate, the fact that most startups will never, really make it. But still people are interested because, startups are cool now. Yeah. How should one think about, if you're thinking as a investment?
Yeah, I think looking at angel investing as an asset class is a really bad idea.
Yeah.
Yeah, I mean, most of them fail, right? Yeah. So, I never did angel. I invested in a large number of companies, Mukesh, much like you, but I never did it to try to make returns out of it, right? I did it for the reason that you said, right? I found it very interesting to be in the loop. My dad was an entrepreneur, my mom's an entrepreneur, my wife's an entrepreneur, my brother's an entrepreneur. I'm the only one, by the way, in my whole extended family is an entrepreneur.
Enabling thousands of entrepreneurs, so it's as
right, exactly. So while there was a Google or Microsoft before that or Dell or whatever, so I always thought it was a great way for me to kind of learn but know what's going on. So that's why I did it. Now I think I got lucky, so I'll do fine on that. So but I do think as looking at it as an asset class, I don't know.
So don't think of making 10x or 100x return for sure.
Look, if you don't do it because that's the objective, right? Look, if you're good and you're lucky, you might make 10x on your corpus. But for a simple thing, right? You should, if you're going to be an angel investor, don't invest in 3 companies. Yeah. Because this is a power law business, extreme power law, right? Which means if you're good and you're lucky, 1 out of 10 will give you 50x. Okay, that pays for everything. But if you're not, if you do 3, it could be a lot of angels come to me, right? My friends who are angel investors say, oh my God, angel is terrible because I invested in 2 companies and they're both dying. I'm like, what do you expect? You do too. Invest in 10 or 20 or 30. Right. So that's where you have to sort of, and then you have to also, because the thing is, this is a power law business, right? Which means there are very, very few companies that really matter. And if you're an angel that doesn't add value and you don't really specialize in anything, how do you even see the best companies? Right. So, but I do think, that being said, you should start off by learning. I think it's a great idea to join networks, whether it's Indian Angel Network or Let's Venture, etc. But if you want to do it long term, you have to learn the game.
So let me tell me if you agree or not. I'll translate it into, let's say you have, budget of 50 lakhs a year. And you pick, maybe say you're going to put behind, maybe 3 or 4 companies, 10, 15 lakhs each, for example, and do it for 10 years.
That's right.
And in the area where you have passion, you have some kind of understanding, right? And then the power law plays out. Maybe 2 out of those 10 will give you that.
That's right. Exactly. That's the only strategy that works. You have to set aside a corpus. You have to invest in a larger number of companies, and you have to just keep doing it. Yeah. And then the last thing is you have to just be ultra patient. Yeah. Because it takes forever.
Especially in India, I think it's
No, I think it takes a long time everywhere. I think we just look at the US and say, look, it's very interesting. We just did this analysis in India, Mukesh. If you look at the peak 15 portfolio, right? Our best companies are now getting from 0 to 100 million in 5 to 6 years, revenue and profitable, right? So it's happening in India too, right? Of course, US is a $26 trillion economy, so it happens faster. But as an angel investor, you're going as early as you can.
Right.
So it's going to take you a decade for a company to do well.
Another area Rajan I talked about is this whole, more deep tech. I think last time we met, we had a conversation about that. I think you're mentioning in the surge also, you are seeing more and more deep tech think I had an incredible experience, Skyroot, and I feel, it is starting to happen. We talked about IIT Madras. They have done incredible job in supporting it. What's your point of where are we at? Because in InMobi was, in some ways ahead of its time, like really pioneering tech company. But majority of things you've seen in India, which are even skilled, they're very operations heavy companies solving a genuine business problem at CM2 negative, but solving the problem.
But now they're all CM2 positive.
Now,
it's amazing, by the way.
Yeah.
It's all CM2
Right,
positive.
yeah.
We just closed an investment for our next cohort. Double-digit growth of revenue. EBITDA positive.
Wow,
Now, of course, we
yeah.
don't want them to be
Right,
positive at seed stage. So I think on deep tech, what is happening is three things, right? We are seeing India's technical talent, right? I'm talking going beyond software, beginning to become entrepreneurs, starting to become entrepreneurs, right? So when you go to, I know you're going to IIT Madras. So they have a sensor lab. It's called something else. I think it's called non-invasive something measurement or something. Non-destructive measurement is what it's called. I'll connect you with Dr. Ghosh's partner.
Okay, amazing.
Yeah, the professor. So these three profs in this lab, okay, IIT Madras, they're on their fourth company, right? So they make sensors, different kind of sensors,
right.
okay. So and IIT Madras is a research path, so they go and they incubate the companies. So I think first thing that's happening is whether it's Indian academic talent or scientific talent in India starting up, or Indians coming back. So in our last quarter search, we had a company called Nutrace, right? So they'd make green hydrogen electrolyzers. And these are two Indians. They got their PhDs in Europe. They worked there for many years, came back just before COVID. And then they said, we're going to build green hydrogen electrolyzers that don't have membrane. There are only two other companies in the world that do this, okay? Then it took them a couple of years to do it. So I think one is talent, right? Because at the end of the day, everything boils down to talent. So that's one thing that's happening. There's a company here in Bangalore, I don't know whether we are not investors in it, called String Bio. Have you met
I have not met them.
I mean, Ezel is fantastic. I mean, she, PhD, worked in the Bay Area for several, has worked for 2 Nobel laureates, okay? Came back and has launched a climate tech company. They were incubated in CCAP. So I bumped into them in CCAP. Anyway, so that's one is talent. I think the second thing that has happened is there's infrastructure now, right? So last year we invested in 2 semiconductor companies. They're both out of IIT Madras Research Park, Incore and Mindgrove. IIT Madras has a set of infrastructure, right, for semiconductor companies that otherwise would cost a startup tens of millions of dollars.
So Rajan, do you think for deep tech companies, I mean, to be honest, historically, we have not seen many, or people have not tried to build it. Do you think the ecosystem has evolved in some ways now already? Like, are you more optimistic about it? No, can we look ahead to like really genuine original tech coming out of India?
Yeah, absolutely. Look, I think, well, firstly, it's early days, right? It's, but it started. I think the movement has started, and there's 3 or 4, there are probably 3 big reasons. One is talent, right? So, for instance, Skyroot. Skyroot wouldn't exist if not for ISRO, right? Because both the co-founders came from Skyroot. We had 2 semiconductor companies we invested in last year, Mindgrove and Incore. They basically exist because IIT Madras has been doing a lot of work on semiconductors for a long time, right? And RISC-V was co-developed with Berkeley and IIT Madras. So I think one is talent, right? So we had a company called Nutrace here in Bangalore. They have green hydrogen electrolyzers without membranes, right? And these are 2 Indians who got their PhDs in Europe, worked there for a while, came back 4-5 years ago, start building electrolyzers that don't have membranes. So I think this deeply technical talent now is starting up from India, because they see the opportunity to do that, right? And second, are also coming back. So I had mentioned that, Ezel, the founder of String Bio, if you haven't met her, right? She's got a PhD and worked in the US in the Bay Area, worked for a Nobel laureate, etc. Has started a company called String Bio in climate tech. That's one. I think second is, look, today there's a lot of infrastructure and support for these kinds of companies, right? So Mindgrove and Inco wouldn't exist if IIT Madras didn't have the infrastructure required for fabless semiconductor companies, right? Because otherwise they would have to raise tens of millions of dollars as a startup to get access to that infrastructure, right? BIRAC has been instrumental in the biotech, in developing the biotech sector in India, right? Because they built all these labs in a bunch of these cities, in Bangalore, for instance. Whereas you can't start a biotech company without this infrastructure. I mean, you have to go raise millions of dollars, right? So I think that has been very, very very, very important. For instance, this new quantum mission that just got announced, right? They've set aside, whatever, a couple of thousand crores to invest in various enablers. So that's number two.
Yeah.
I think the third very important thing is these sectors being opened up, right? If space wasn't privatized, we had one space tech company 10 years ago. Today we have 190, right? Because there are two big drivers, ISRO and deregulation, right? And then of course everything else followed: capital, talent, people, etc. So I think whether it's let's take defense, right? So like right now we are really, really trying to find a defense company that we like, because what has changed is the Indian government said, look, we are going to locally buy defense technology, promotes defense technology. So I think very, very targeted reforms, regulatory-based regulatory reforms are opening up these sectors. So these three things happening, right? One is a talent, because without talent you can't do anything, right? I think the second is just infrastructure ecosystem, and the third is regulatory changes that enable this to happen, right? Like Idea Forge got made because of a $7 million order that they got. I think whatever it was, 2015-16 timeframe. So this is all beginning to happen. So I'd say it has started. But I would say, look, we are probably, if you look at the SaaS wave, right? Zoho was 2004, 2005, but really Freshworks, Girish, 2010. Right? So that's sort of when it started. We could argue e-commerce and SaaS both started. E-commerce ramped much faster. But now the first SaaS unicorn, Mukesh, was 6 years ago. Today we have 23. I think we will have 100 SaaS unicorns by the end of the decade, right? How many of them will be AI companies? I think deep tech is probably, I sort of put it equivalent to where SaaS was in 2010. So we are probably in that 2010-12 time frame. We're seeing a bunch of early companies that are very, very interesting. But the train has left the station. So we last year, just to give you a sense, 25% of this early seed investments that we made, which search, were non-AI deep tech. So I'm excluding AI. If you add the AI, it's 50-60%, right? So it's really now picking up steam.
Got it. So as this, these cohorts mature, and let's say maybe fast forward a decade from now, we may have many dozens of
easy. Easy. I think in a bunch of these spaces, right? Like let's take within climate, right? You have the EV space. You have, let's say, the new energy space. You have the biosciences. I think it's going to be a very, very big space in India, right? On industrial biotech, agri-biotech, human biotech, etc. So that's sort of those are a bunch of spaces. Semiconductors. You take defense. Defense, we think will easily. Defense will have tens of billion-dollar companies, right? Now, a bunch of them will be manufacturing companies. A bunch of them will have core tech innovation. Like Tonbo is a super. We're not investors in Tonbo, but it's a super interesting company, right? So I think we're going to see a large number of companies.
So we can use this as an invitation to in India. There's no dearth of really bold entrepreneurs, especially people probably have either already have deep tech chops or even strong desire to learn about technology, because all these are opening up and it requires a little bit more bolder vision. And
I think so. When you go to IIT Madras, I think you'll see this. We're beginning to see this now, right? Where these deeply technical, you have to be deeply technical, right? You can't launch a deep tech company with an MBA. You can have an MBA after you get a PhD. But by the way, last cohort of Surge, Mukesh, we had 12 or 13 companies, 8 of them had PhD founders.
Amazing.
8 companies, both founders of PhDs, okay? So we had our first quantum computer company. It was one of the world's foremost experts in quantum, right? The PhD and was a professor in the US. So number one, you have to be very technical, right? But if you're technical and you have ideas and you want to be an entrepreneur, I think the ecosystem is coming up. Now, that being said, as you know, you saw this in Skyroot. We see this in our portfolio. We still have a long way to go on, for instance, capital, right? So I think we are hoping that with the third term of our Honorable Prime Minister, we will have a lot more funding going into deep tech, right? Deep tech funds, R&D funds, things like that.
That'll be amazing. And with that, let's segue into, you mentioned, this 3.5 trillion economy going to 10 or 20, depending on what time frame, but big numbers.
Yeah.
Which is, and if you look back in China's journey, probably China went through same 3.5, 4 to 20 over
2005. They were at the same GDP per capita.
Yeah, so over the last 2 decades, grown for 5-6x. They're probably looking at similar kind of growth. When China has produced some humongous size companies. We talk about $1 billion revenue. They have many companies, tens of billions of revenue.
Yeah,
that's all most likely going to happen. Which can only bode well for the country, but also for the whole entrepreneurial VC ecosystem?
Yeah, no, absolutely. Look, I think India today has 16 companies, startups that are public. First was InfoEdge, then was Make My Trip. Most recently was Zomato, etc. Last week there was 2 IPOs. Actually, Ixigo was oversubscribed 1.6x in the first hour.
Wow.
So Alok must be a very happy man today. I don't know what the latest is at the end of the day. So today, Mukesh, we have, let's set aside unicorns. Okay, those are private. Let's look at public markets, because the public markets are the real deal. You go public, that's the real deal. We have 16 companies, 16 startups that are public that have over $1 billion market cap. Okay, now except for Zomato, which is over 10 billion, everything else is sub 10. InfoEdge, I think, is getting close to 10 or 8 or something like that. Make My Trip and InfoEdge are getting close to that 10 billion, right? But most of them are in the 1 to 5 billion. So I would say where we are today is we're in the, call it 500 million, so 4,000 crores to maybe 2-3 billion market cap range companies. I think we'll have a large number of them, right? I think we can easily get to, the 16 number can get to 100 by the end of the decade. I do think towards the end of the decade, we will start seeing the first set of 50 to 100 billion market cap companies, right? I think Flipkart, Zomato, these sorts of, commerce companies, I think will start getting there. But then if you fast forward 10 to 15 years, I don't think, by the way, China, I don't think we'll grow at 10% for 30 years, but, we can grow 7% for 20, 30 years, right? So I think towards the maybe 2035, 2040 is when I think we'll start seeing these startups become 3, 4, 500 billion market cap. I do think we could have our first $1 trillion public company as India. No, I'm not talking about startups. Okay, it'll be either the Tata Group or RIL. Before the end of the decade, because they're all growing at 20-25%. But I think, look, there's never been a perfect time. So I'll end with this. So you state China. India today, Mukesh, is 2005 China on GDP per capita, but 2018 on digitization. So in many ways, as our GDP per capita catches up to China, we will accelerate much faster. Right. Much faster, right? Because it's fully digitized already. Right? That's why you're seeing Mamaearth go from launch to IPO in 7 years. I mean, if you had asked you in 2015, right? Is India going to have a personal care and beauty startup? No. Is it going to be startup and go public and trade at what, 15,000? What is it now? 15,000 crore market cap in 7 years? I'm like, no, it's not going to happen, right? So I think it's beginning to happen. So it's a very exciting time, Mukesh.
That's incredible. I think, Rajan, you've been a big part of the startup ecosystem in India. I think through, both your multinational roles, which we didn't get opportunity to talk about today. But I mean, Google was a big enabler of what happened in the country in the early days. Many dozens, if not 100 plus startups you personally directly invested in, and now through, Surge, you have again 100 plus portfolio of companies that, we're actively nurturing, mentoring. I think it's a huge contribution to the startup ecosystem. I'm sure, much better than Pahola will play out for you.
Well, let's hope so.
But I think that there's also a lot of service to the ecosystem. So very thankful and grateful to you for what you're doing. And thanks so much for taking the time for talking to us.
Well, thanks for having me, Mukesh. And thanks for everything you've done. And also doing this podcast, which I know takes up a lot of your time.
Thank you, Rajan. At Sparks, we aim to bring to you stories of exponential impact. We share in-depth analysis of what goes behind success stories. If you find our conversations interesting, you can join us by subscribing to our YouTube channel. You can also listen to Sparks on Spotify, Apple Podcast, or any other audio platform of your choice. If you have any suggestions on who we should invite or what topics we need to cover, just let us know in the comments. We are always listening, looking for ways to improve, and keep getting better as we go along.